Hello, everyone. Rob Wolf with the Loan Factory, and you are watching or listening to the Lone Wolf podcast. That's loan, Loan, as in borrow. The show that talks about mortgages, but I'll throw some real estate into the mix. And you might be watching this on my YouTube channel, which is the same title, the Lone Wolf podcast. You can reach me by email, rob.wolf@loanfactory.com, or call me on my cell, 727-366-5722. I'm not a bank, so I'm open after 5 o'clock and on the weekends. If you get my voicemail, leave a message. I promise you I'll get back to you ASAP. I'm in the ABC business, always be communicating. I am a licensed loan officer in the Sunshine State of Florida, where I live, Pennsylvania, where I grew up, and Colorado, where I vacation every year. And I actually lived there way back in the 90s. This is a podcast. It's just me. But I do have guests every now and then. If you want to be a guest, let me know. As long as it's affiliated in the mortgage / real estate world, we can have you on as a guest and work something out. I keep these podcasts about 20, 30 minutes at the most. They're aired every Wednesday at 9 p.m. But if you miss an episode, no big deal. Just go to my website and you can look at this podcast as well as previous podcasts. Okay, so we are going to talk about credit. Yes, that nasty word that affects our lives and how important it is in the mortgage loan process. And I'm going to talk about the basics of credit. I'll talk about some tips to help you out with credit. And I want to talk about a program that our premier partner, Rocket Mortgage, has and how it will benefit you immensely when you get a loan with them. Okay, so before I get into the weeds, okay, I'm not a licensed credit repair person, and this is not about credit repair. There is an example of a rapid rescore, and I'll show you some tips to help out with your credit, but this is really geared towards people that already have good credit to get pre-approved for a loan and to go house shopping. Okay. So let's talk about the minimums. Okay. And I'm talking about qualified mortgages, the ones backed by the government, not non-QM. Okay. So for a conventional 30-year fixed, Fannie Mae or Freddie Mac, you're looking at a 620 credit score. That's the minimum. FHA is 580. USDA is 640 and VA is 620. Now, those last two, VA and USDA, there is a little wiggle room. You can go lower, but for our conversation pieces, that's kind of where you want to shoot for. And the gold standard in the mortgage field is 780. Okay, so if you're above 780, that's where you want to get to get the best rates and the best lender credits. And I'll talk about that in more detail. Now, some people, they have Credit Karma on their iPhone app. I have it. And they sometimes tell me, well, my Credit Karma score is X. Well, they're not always accurate, okay, to getting a mortgage. I mean, Credit Karma is good. It gets you in the ballpark. But don't think that if your Credit Karma has a score of 730, then that's what's going to come up when I pull your credit and we do a loan application. And without getting into too much detail, the bottom line is they just use different credit reporting modules and how they score different activities you're doing to get those scores. Okay, so again, it gets you in the ballpark with Credit Karma, but that's going to be different than when you go to your loan officer and get pre-approved. Now, speaking of your loan officer, and I hear this a lot, I don't want my credit to get hurt when I apply for a loan. Okay, so I can do a soft credit pull and give you an idea of where you are. That's still not as good as a hard credit pull. And I can't run it through desktop underwriter your application with a soft credit pull. But anyway, when you do a credit pull with mortgages, it's only going to affect about 5 or 10 points. Okay, so that's not going to be the difference of whether you get the loan or not. Okay, and I've heard people tell me, oh, my credit went down 20, 30, 40 points when I did a credit pull. Well, I can almost assure them there was other activity that happened that month that drove your score down 30 points or more. Okay, so for mortgage purposes, okay, it's about 5, 10 points. And let me explain this. The credit agencies recognize that when you go for a mortgage, you're probably going to be using more than one lender. You want to validate. Okay, you want to get the best deal. So they have a 45-day window. So if you go to lender A on a Monday and get pre-approved or get a credit pull, you can get multiple credit pulls within that 45-day window, and it'll be counted as one. Okay, so just keep that in mind. Now, this is just mortgages. Okay, so for example, if you get a mortgage application, fill it out, and your loan officer pulls credit, but then you open a credit card, or you also go get a used car, well, that's 3 accounts you're opening. They're all separate agencies or areas. Okay, so keep that in mind. But let's stay focused on the mortgage process, and you have a 45-day window to count as one pull. Now, your pre-approval letter, that's usually good for 2-3 months to go house shopping. Okay, let's talk about ways to boost your score. Okay, again, I'm not licensed. These are just some ideas, and hopefully you've already have some of these that you're working on. Okay, you got to work on your past due accounts. Okay, when you're waiting and not paying your bills, hopefully you're at least paying the minimum on your credit cards. But if you're not, and it goes to 30 days late, 60 days late, 90, 120, the more of those 60, 90, 120-day late payments, the more it's going to affect your credit score. And unfortunately, if you have derogatory accounts where you're totally ignoring your bills, okay, you may have too many and you won't be able to get pre-approved. Okay, so make sure that you're at least paying the minimum on your credit cards. And if not, you're paying more down on your credit cards. Make sure you don't have anything in collections. Now, you can actually call your credit card companies and ask them for a higher credit limit. Okay, because your credit card companies and the credit agencies, they look at what percentage of your authorized amount are you carrying as a balance. Okay, so let me explain that. Let's say you're authorized for $10,000. Now, personally, I don't know anyone that charges that much money in a month on their credit card, but they may charge $1,000 or $2,000 for the month. Okay, so if they charge $2,000 for the month, that's 20%. Okay, for all your credit cards, you want to be under 30%. Okay, does that make sense? Now, what if you call them and say, can you increase my authorized limit? And they said, sure, make it 15%. Okay, well, now that $15,000. So that $2,000 balance as a percentage of $15,000, I'm going to do the math real quick. I think it's like, what's that, 15%? Something less. I should know that. Hold on a second. Let's figure this out. Yeah, I'm doing this on the fly here. 13% as opposed to that 20% when it was $10,000 limit. Okay, so that's one thing you can do. Now, or maybe you can be an authorized user with someone that does have good credit. So for those in their 20s, maybe your parents, maybe one of them has really good credit. Now, you're not going to use their credit card, but you could be an authorized user because they've got such stellar credit. That's a little trick you can do also. Let me explain a quick tip for those people that have credit card balances. And I run into this a lot. I'll talk to people about their credit and they say, well, I don't have any debt. I've got perfect credit. Well, you do have debt. because it gets reported to the credit agencies. Because see, a lot of people think when they pay their credit card in full, they don't have debt. And that's not how it works. So let's pretend you make your credit card payment at the end of the month, on the 30th of every month. But the credit card company, they report your balance in the middle of the month on the 15th. So let's go back to that $2,000. Let's say the beginning of the month, you run up $2,000 worth of credit card charges. And so the 15th, you're showing $2,000. They report that to the credit agencies. And at the end of the month, you pay it off in full. So you're thinking zero, but it doesn't work that way. It's when the credit card companies report the balance. That's what affects your credit score. So what you can do, call up your credit card companies and ask them, when do you report my balance to the credit agencies? And then back it up a couple days, pay it online as much as you can, and that will bring down your percent of balance of your authorized amount. Okay, so that's a quick tip you can use, and that'll increase your credit score, fairly quick. Okay, so let's jump ahead, and you're probably doing this already if you're home shopping, watching, what you're charging, not opening accounts. But I talk to people, I send a video out ahead of time, and I've got one out there, the do's and don'ts once you have a contract signed. Okay, so now we've got a 30-day window, 45-day window until the closing date. And I've heard stories about this. This has not happened to me because I'm pretty diligent with my buyers. But some people think, okay, we got the contract. Let's go shopping. We got to furnish the house. Let's go get that big screen TV. Let's go to the furniture store. That's the worst thing you can do, okay? Don't make big purchases. Don't trade in your car for another car. A big trick to watch out for. Let's say you're going to the furniture stores and you're just shopping for ideas. And the salesperson says, well, for a limited time, if you want, we've got a 0% interest on a credit card. You don't have to charge anything yet, but just open the account and then you're good to go. Well, opening that account will hurt your credit score. Okay, so we don't want to open up any accounts. We don't want to make any big purchases. We don't want to close accounts either. Okay, so when you pay down a credit card, if it's down to zero, that's fine. Just keep it as is. Don't call them and close the account out. The other one is do not co-sign on a loan. Okay, and that's a good trick you can use with all your friends and family. If they ever want you to co-sign for a loan, no, I'm probably going to be shopping for a house soon. I don't want that affecting my credit. Okay, so just say that every time. But in this case, when you do have a sales contract, yeah, you do not want to open up any credit or co-sign for anybody, because when you co-sign, whatever that minimum payment is for that person you co-sign for, that goes on your credit. Okay, so just keep that in the back of your mind. Okay, let's talk about the program that Rocket Mortgage has. They are a preferred partner with Loan Factory. And what they do is we have a 30-day window, as I said, to get to the closing table, okay? Did you know that once we get the sales contract, okay, I'm going to lock you into an interest rate. When you're locked into that interest rate, did you know that if you increase your credit score during that 30-day window, you could get a better rate and or a lender credit? Okay, so Loan Factory, Matt and Brian, they've got a team, and I'll lock you in. I'll send the file to those guys, and they're going to look at your credit, and they're going to have some recommendations. Now, they're going to talk to me, and I will relay this information to you. See if you can do A, B, C, and we'll do a rapid rescore and see if this jumps you up in your credit score. Because see, what happens is your credit score is in 20-point increments, and that affects the pricing you get when you go shopping for a mortgage. So let's say start at 700. Okay, so 700 to 719, 720 to 739, and so on. And you want to get up to that 780 or above. Okay, so we're going to try to jump you up 1, 2, or 3 tiers. And we can do this up until closing, not the day of, but 4 or 5 days before closing, and see what we can do for you. So as of today, I just went on Rocket's website. Okay, so I'm going to give you some examples here. Let's say we've got a $600,000 purchase price. You put 10% down, so the mortgage is going to be $540,000. And we're going to look at 7.75%. Okay, I know rates they keep going up, but for this conversation, we're going to say 7.75%. If you have your credit score between 700 and 719, you're going to pay $713 to get that rate. Okay. If you go to 720 to 739, you just move up 1 tier, you get a lender credit of $643. Okay. So that's a difference of $1,356. So let's just pretend you had a 715 credit score and you went up 5 points. That just saved you $1,356. Okay. The next tier, 740 to 759. Okay, so let's say we went up 25 points. You get a lender credit of $1,993. Okay, so the $1,993 for a credit, but you were going to pay $713 when you were down to that $715. That's a swing of $2,706. Okay, now these other two are not as common, but it's not impossible. If you can get to 760 to 779, okay, so if we started with 715, we jumped up to 760. That's 45 points. And Rocket, they told me they've had people do this before. You get a credit of $3,391. So that's a swing of $4,104 compared to what you were at down to the 715. Now, you could probably have your choice. You could actually get a lower interest rate, maybe 7.625. But just think about that. You could change $4,104. And the last one is 780. If you could get the 780, now that's a big swing. That's 65 points. You get a lender credit of $4,741. That's like half your closing costs probably. Okay, so very important to have good credit, but we can make it better by getting this guidance. Let me ask this. Does your bank do this for you? Do they offer this to you? I've never heard of this program, and that's where Loan Factory and Rocket Mortgage can help you out during the process to get you that extra push. And it's no charge. It's not like you have to pay $100, $500 to get this. This is because Loan Factory does so much business with Rocket. We're a preferred partner, and they offer this to the customers. Okay? So hopefully I left you with a good feeling about this, that, keep working on your credit and good things can happen. Even during the time you sign a contract, you can make that last push to help you out at the closing table. All right. So again, it's the Lone Wolf Podcast. You can YouTube it or just Google it, www.thelonewolfpodcast.com. And you can see some old episodes. Or like I said, just give me a call, 727-366-5722. or drop me an email, rob.wolf@loanfactory.com, and I'll be more than happy to help out. Okay, folks, hope you learned something, and I'll see you on the next podcast. Okay, take care.